What you're looking at here are two alluvial diagrams that break down average price paid for property by property type and by postcode sector. Both charts focus on January 2025 and both use the same structure, which makes them perfect for comparison. The first graph is Birmingham, covering postcodes B1 through to B20. The second graph is Leeds, covering as many postcodes as could fit on the graph. Let's start by explaining how to read these, because once that clicks, then the patterns become quite obvious. So on the left hand side of each chart, you've got the postcode sectors. In Birmingham, that's B1 all the way up to B20. In Leeds, that's LS1, LS2, LS3 and so on. Each of these represent a different geographic slice of the city. On the right hand side, you've got the property types: F for flats, T for terraced, S for semi-detached and D for detached. Between these two sides, you see the flows. Each flow represents the average price paid for the property type within that postcode. And that's the key thing to understand. The thickness of the flow reflects the relative average price. To emphasize, the thickness of the flow reflects the relative average price. Thicker flows mean higher average prices. Thinner flows mean lower average prices. So this isn't about transaction counts. It's about where the value sits and how it's distributed. So if we start with Birmingham in January 2025, straight away the chart looks very busy. You've got a lot of postcode sectors, and within each one, multiple property types feeding through. That tells us something immediately. Birmingham is structurally diverse. There isn't one single property type dominating everywhere. If you look at the central postcodes, things like B1, B2, B3, the prominent flows are going into flats, and those flows are thick. That tells us that in central Birmingham, flats are commanding relatively high average prices, even compared to houses in some outer areas. That lines up with what we'd expect. City centre apartments, new build schemes, higher density, professional demand. As you move outwards into the postcodes, like B10, B12, B14, you start to see terraced and semi-detached properties become more prominent. The flows here are still substantial, but the value is spread across property types rather than concentrated in flats. This suggests more traditional housing stock, and a market where value is driven by houses rather than apartments. Now look at the detached properties in Birmingham. Detached flows are visible, but they're less dominant as far as these postcode sectors are concerned, and they're concentrated in specific postcode sectors, not across the board. That tells us detached housing in Birmingham exists and carries high value wherever it does exist, but it isn't widespread across the city. So Birmingham's price structure is mixed, with the value distributed across flats, terraces, semis and detached homes, depending on location. One important thing to notice in the Birmingham chart is overlap. You see multiple postcode sectors feeding into the same property types with similar flow thickness. That suggests that pricing is relatively continuous. There aren't extreme cliffs between areas. Value transitions gradually as you move across the city. In short, Birmingham looks like a layered market, not a polarised one. Now let's switch to Leeds. Visually, the Leeds chart feels different immediately. There's more separation between property types and clearer dominance patterns. And once again, to emphasise, Leeds was not filtered for certain postcodes. As many postcodes as feasibly possible were included in this chart, unlike Birmingham. In central Leeds postcodes, LS1, LS2, LS3, you again see strong flows into flats for January 2025. But compared to Birmingham, these flows feel more concentrated. This suggests that central Leeds has a very defined apartment market, with flats playing a stronger role in the average price formation. As you move outward into LS postcodes like LS14, LS17, 18, LS20, the balance shifts quite sharply. Here the detached and semi-detached properties dominate the value flows. The detached flows in particular are thick and confident. This tells us something important. In Leeds, detached housing plays a bigger role in driving average prices than it does in Birmingham. Detached homes in Leeds aren't just present, they're structurally important to the market. Terrace properties in Leeds also show a clearer pattern. Rather than being spread evenly across many postcodes, they tend to dominate in specific zones. This suggests clearer housing typologies by area. In other words, certain parts of Leeds are terrace heavy, others are semi or detached heavy, and the pricing reflects that more cleanly. Compared to Birmingham, Leeds looks less blended. Property types feel more geographically segmented and value flows are more decisive. When you put these two charts side by side, the contrast becomes very clear. With regards to Birmingham, more mixed property types across postcodes exist, flatter transitions between housing types, value spread across flats, terraces and semis. and there's less dominance from detached housing. This points to a city that's denser, more layered and structurally complex. Leeds, on the other hand, shows clearer separation by housing type, stronger dominance of detached properties in outer areas, more decisive value flows. This suggests lower density, more suburban structure, and stronger price premiums attached to space. Another way to put it is that Birmingham's market feels interwoven, Leeds' market feels zoned. Again, it's important to emphasise that Birmingham postcodes were far more filtered than Leeds were, which could have strongly influenced this outcome. What these charts do brilliantly is to show something that averages hide. If you just looked at average price by city or average price by property type, you'd miss how location and housing type interact. These alluvial diagrams show where value comes from, how it's distributed, and which property types actually matter in each postcode. For investors, this helps with targeting the right property type in the right area, avoiding mismatches between strategy and location. And for developers, it highlights which housing types the market already supports, where price depth exists. And for analysts, it reveals the internal structure of city level pricing and not just the headline numbers. The final takeaway is that both Birmingham and Leeds are strong, diverse property markets, but they're strong in different ways. Birmingham's value is layered and blended across property types in the first 20 postcodes. Leeds' value is more segmented and spatially defined, and this is across all the postcodes in Leeds. And by visualising the data like this, postcode to property type, value flowing between them, you get a much clearer sense of how these cities actually work, rather than how they're described in headlines. This is what happens when you stop asking, what is the average price, and start asking, where does the value really sit? Thanks for watching. Please let me know if you have any queries or have any data analytics requirements related to the property world. I can also advise on many aspects of property investment, as I have a long and varied history as a landlord. See you next time.